Hello traders and investors, welcome back to the Trend Trader channel. In today's video we're going to be looking at Netflix. We will go through two things. We will look at the financial statement, the recent financial statements, and then we will look at the chart to see or to identify potential trading opportunities. But first, we saw that Netflix said that they're going to start cracking down on password sharing. So that is something that met some bit of resistance from Netflix subscribers globally. So as things stand, Netflix still says that they're going to restrict password sharing. But as you can see, there are people that are already fighting back, cancelling their membership. Okay, so now it means that in future this has the potential to affect the revenue of Netflix, but that is just in future. We will cross that bridge when we get there. So let's start by looking at the Netflix financials. You can find the information on the Nasdaq website. It's under the SEC filings. So we're going to be looking at the filings that was filed in April 2023 for the period that ended in March 2023. Right, so there are certain things that we're interested in. Again, Netflix is listed in the Nasdaq stock market. There a lot of tech companies are listed in that exchange. So we're not going to go through this whole document. We're just going to be focusing on the things that matters to us, such as the revenue and the balance sheet. So at this moment, we are looking at the income statement of Netflix. As you can see here, it says it is unaudited and the figures are in thousands. So I'll be talking about the figures in billions rather than thousands. So one of the first things that I look at when I look at a company, I look at revenue. How much money is the business bringing in? So here we are comparing between March 31, 2022 and March 31, 2023. So we are looking at year on year. Other companies can report year on year or quarter on quarter, but for this we are looking at year on year, even though here they say okay, it's 3 months that ended at this given date, but it's over 1 year comparison. So in terms of revenue, we can see that the business, there's a cost of revenue there where they're talking about 8.1 billion, which is an increase from that 7.9 billion that was reported in 2022. And then finally, the income was an income of about 1.7 billion. You can see that there is a reduction there because previously they reported about 2 billion operating income in 2022. This means that the revenue or the income has decreased slightly. Now when you look at the net income after taking all the expenses into account, now we are sitting at 1.3 billion there. Again, it's a reduction from a previous 1.6 billion. So that's about a 300 million decrease in there. Remember, there are so many reasons why we could see this decrease. Maybe people can no longer afford to subscribe to Netflix, or maybe Netflix is spending more money in terms of generating content for their subscribers. And also there are people that are talking about the recession in the US. So it could be a lot of factors that resulted in this reduction in net income. Nonetheless, the company reported a positive net income, and that is something that we like. So what is in for us as shareholders? For us, it is the earnings per share. Remember, we own Netflix on a per share basis, so we need to understand how much money our share is making for us as shareholders. So we can see that for the year that ended in March 2023, the share or earnings per share was $2.93, but also that was a reduction from in comparison to last year where it was $3.60. Again, there could be a lot of factors that resulted in this reduction in operating income, the net income, and ultimately the reduction in the earnings per share. But the value is still positive. We are still making money from our shares. Hopefully in the next quarters this figure will improve on a quarter-on-quarter basis and ultimately improve in terms of a year-on-year basis. Okay, so now let us scroll down and see what is in the balance sheet. So in terms of this is still the same comprehensive or statement of the comprehensive income, it gives the similar value in there, but now they've added that foreign currency adjustment, but it's not something that makes much difference there. The statement of cash flow, other people are interested in the statement of cash flow, but I don't really look at it. One thing that I always pay attention to is the cash and cash equivalent of the business. So there's one at the beginning of the period and one at the end of the period. So the figure that you're interested in, it's the one that is at the end of the period. So you can see that the business has about 6.7 billion that is in the form of cash and cash equivalent. It's nice to know how much of it is hard cash, because the cash equivalents could be anything that can be readily converted to cash, but cash is cash as we know it, and it's nice to see if the business has cash, because we know cash is king. As long as you have cash, there are a lot of things that you can do, especially in a business, because you can expand the business if you have cash. Okay, then finally let us look at the balance sheet of Netflix. So in the balance sheet, you're only interested in the current asset and current liabilities, because we want to determine how much net working capital the business has. So when you look at the total current asset, it's 10.4 billion. It's an increase from 9.3 billion in 2022, but now you see the comparison is on a quarter-on-quarter basis, because this is December 31, 2022 in comparison to March 31, 2023. So now we are comparing quarter on quarter. So again, the total current asset, they are sitting roughly around 10.5 billion. And then the total current liabilities there, let me look at the figure here, it's 8.3 billion. So if you subtract the current liabilities from the current asset, we are left with a positive figure. So that tells us that Netflix is going to be able to cover its short-term obligations. By short term, we are referring to a period that is less than 12 months. So some of things that I like to see in a company: I like to see positive earnings per share, I like to see positive net working capital, and then I want to look at that breakdown of revenue. Obviously, the breakdown of revenue will tell me whether the business is profitable or it's not profitable. If the business is profitable, then we expect positive earnings per share, and then I like to see the earnings per share growing, but the earnings per share, they are not always going to grow. There will be a period of slowdown, there will be a period of decline. Such things happen in the market. So now that's it that I wanted to cover in terms of fundamental analysis. Now we can look at the chart of Netflix. As a disclaimer, I already have a position on Netflix. At this moment, the position is working there, so I'm happy with this position. But now, why did I buy Netflix? You can see that Netflix has been on this nice uptrend. It has been forming a series of higher highs and higher lows. Okay, so these are the higher highs here, and then these are the higher lows. And then you can see that from around February 2023, the stock reached this supposedly a bit of a resistance level here. This was an area of interest around here before the stock started to pull back. So as the share price pulled back, it did find support around this level, which coincide with this previous resistance level in there. So this level played a nice support. You can see the stock, it moved up before forming something that looks like a bull flag. A bull flag is something that looks like this. So then what you want to do with the bull flag, you want to buy as the share price break above this level in here. So the ideal buy area was somewhere around here, buying this. But remember, now we have this potential resistance level in there, so which maybe coincide with that top part of the bull flag. So we did not take a position when that breakout happened in here. We only took a position when the stock traded above this top level of that bull flag. So this is the area of interest that we're looking at, and then that is when we bought Netflix. So what do we expect Netflix to do? We would like to see the share price of Netflix continuing to move up, but how up is going to go, we cannot predict at this moment. We are looking at this level here to see how the stock is going to behave around $520 per share. But if everything goes well, if the business continue to do well, then we might expect the share price to break above that $520 level in there. So everything, the reason for buying the stock is purely based on technical analysis, even though there are some interesting things that we see on the balance sheet, because price action is what we're interested in, but it is also important for us to identify what could be a catalyst to push the share price high there. So as long as the business is profitable, other investors that prefer to do fundamental analysis, they might have an interest in buying that stock. And then again, nothing is guaranteed. The share price can still crash, it can still come down, and that is why we have our stop loss somewhere around $348 per share. So we will see. So the entry level to the lower or to our stop level represent the risk that we are taking, and the entry level going all the way to a potential profit represent the reward. So whenever we take a trade, an ideal scenario is that we have at least 1:3 or 1:2 risk to reward. So now when you're looking at this potential risk to reward, we are looking at about 9.67. So we are not talking in terms of multi-bagger, we are talking in terms of a risk based reward. So we'll see how this position is going to play, but like I said, we already have this position in our portfolio. So let's see how the market is going to behave. So that's it for today. If you found value in this video, please make sure that you subscribed if you haven't subscribed, and make sure that you smash that like button. If you have Netflix in your portfolio, feel free to share with us what do you think is gonna be the future of Netflix, especially given that password crackdown. Let's see how people are going to behave on that, and also let's see how that is going to affect the price or the share price of Netflix. But that's it for today. We will see you in the next video.